Welcome to Insightful Value, where we spotlight undervalued companies that may be flying under most investors' radars. Today we're checking out Unitil, whose share price has slipped recently. Could this dip be a contrarian opportunity or a signal to steer clear? This review is for informational and educational purposes only, and not financial advice. If you like clean, jargon-free analysis, hit like and subscribe to our channel. Unitil Corporation is a regulated utility serving parts of Massachusetts, New Hampshire, and Maine. It provides electricity, natural gas distribution, and energy services through subsidiaries such as Unitil Energy Systems, Fitchburg Gas and Electric, and Northern Utilities. From a value investor's view, Unitil offers steady regional utility exposure, predictable cash flow, and reliable quarterly dividends, currently paying 45 cents per share annually. In the first half of 2025, Unitil reported adjusted net income of $33.1 million, up 5.1% versus prior year, driven by a 17.1% increase in gas gross margin to $108.1 million and modest electric margin growth. Customer additions and the strategic acquisition of Bangor Natural Gas contributed significantly. However, operating and maintenance costs rose nearly 19.3%, and net interest expense surged 25.2% as debt increased following acquisitions and high rates. Operating cash flow remains positive, and the company increased capital spending by 28%, totaling $72.8 million to expand infrastructure and service capabilities. These investments suggest growth but pressure near-term margins. Dividend history has been consistent with around $1.80 per share in annual payouts and a recent 5.9% increase, reflecting confidence in free cash flow even as earnings grow modestly. Unitil's dividend payout ratio remains controlled in the 55 to 65% range. Profitability metrics show earnings per share growth around 5% and solid return on equity near 9 to 10%. But why has the stock pulled back? There are a few headwinds. Unitil marginally missed Q1 2025 consensus by 1 cent on earnings per share despite revenue beating expectations, leading to a roughly 4% share price drop post-earnings, signaling concerns about valuation despite core stability. More critically, regulatory uncertainties emerged in Massachusetts, where the state regulator disallowed cost recovery on deferred income taxes of about $1.4 million and reduced the revenue recovery cap for gas infrastructure, adding long-term uncertainty to returns on new investment. Regulations are tightening in anticipation of net zero emissions goals, introducing risk to gas infrastructure planning. So why might someone consider investing now? Unitil offers a secure, regulated business model with diversified energy services, growing customer base, and history of dividend growth. Its acquisition pipeline and infrastructure investments support long-term rate-based expansion and earnings growth, targeted at 6.5 to 8.5%, rate-based growth, and 5 to 7% EPS growth over time. The stock now trades near its 52-week low, and valuation multiples such as a PE around 17 to 18 and EV/EBITDA around 8 to 9 suggest moderate relative value versus peers. On the flip side, why not invest now? Rising operating and financing costs, regulatory rulings in Massachusetts limiting cost recovery, potential further regulatory clampdown on gas infrastructure, and modest earnings growth introduce risk. A slightly missed earnings estimate raised concerns, and short-term credit cost pressure may squeeze margins further. Looking ahead, Unitil's potential recovery depends on resolving regulatory uncertainty, managing cost growth, closing pending acquisitions such as Aquarian water entities, and delivering consistent earnings and dividend growth. If rate case outcomes are favorable and margin recovery returns, sentiment could rebound. At Insightful Value, we specialize in deep dives into undervalued names, translating key data without the jargon so investors can make informed decisions based on fundamentals. For more on Unitil and other value opportunities, head over to InsightfulValue.com. Thanks for watching. Don't forget to subscribe and like this video for more grounded analysis.